Hey, what's up, guys? What's up? What's up? It's your boy Jose Cabrera coming in here with another quick YouTube tutorial video. Happy Saturday, everybody. It's January 29th, 2022 here. And I wanted to come in again with another tutorial video for everybody here on my channel, everybody a part of my team that follows me. This is definitely another video that you will find very useful. Okay, so on this video today, what we're going to be speaking about is a certain tool, right, that we use when we trade forex, right? When we're in the forex markets, when we're trading, when we're marking up our charts. This is something that you can definitely use, right, to your advantage when looking for entries, when looking on seeing, right, for yourself, when you want to go into a trade, when you want to see where you want to go in at what precise price. I believe this tool will definitely help you. Okay, so first off, before I keep going, make sure you subscribe to my channel, hit that like button, guys, and leave me any comments, any questions below in the comment section. Okay, guys, so let's get it going. What is the Fibonacci? Right, the Fibonacci is a measurement tool used to measure the percentage decrease or increase to point better entries. Okay, to point better entries. So, um, you know, basically, in something more simplified, right? The Fibonacci tool is a tool basically, designed to help you look at the market and get a better entry. Okay, get a better entry as far as pullbacks, as far as the market retracing after it's in a current trend. Okay, so for all those that don't know all the things that I just said, pullbacks, trends and all that, make sure you just check out my other videos, or if you're part of my team, definitely go into our paid Facebook group and check that out. Right, so again, the Fibonacci will give you better entries. It will help you out as far as knowing, if the trend is going to keep going, if you can take an entry right off of one of the Fibonacci levels, and it'll give you better entries, so you won't have that much drawdown. Okay, drawdown is basically when you're in red, when you're in negative in a trade. So the Fibonacci kind of helps you eliminate that by getting good entries, right? Getting precise entries on levels that the Fibonacci gives you. And I'm actually going to talk about those Fib levels, right, that you need to pay close attention to, and I'll show you in the charts why. That way, when you use it, you can look at those percentage levels, and from there make your decision on the trade that you want to take, okay, or what setup you want to take off of the Fibonacci extension tool. All right, guys, so here I have a document that I will be sharing, and I think I already shared inside of my paid Facebook group for all the members in there that want to use the Fibonacci tool and just want an extra document to kind of help you out. This is the document that I've created for you guys. Okay, so how to use the Fibonacci tool, right? You want to draw it with the trend. Okay, so again, if the trend is going down, you wanna go ahead and draw the Fibonacci tool following the trend. Okay, so obviously, if the trend is going down, right, that means that the price most likely started at a high price and then dropped down to a low price, right? So in all reality, right, and I'm going to show you this on the charts here in a minute. In all reality, you have to draw the Fibonacci tool from the highest point to the lowest point of the floor. Okay, so, and I'll show you that here in the charts in a minute. It'll be a little bit better to understand once you see the visual. Okay, but I want to make you kind of understand how to use it. Okay, because some people just don't know how to draw it, they don't know where to put it in the charts, and that's what I'm explaining. So if it's on a downtrend and you see that market gave you a lot of red candles, very big, strong red candles, bearish candles, bringing the price down from a certain point that was higher than where it is now, then what you need to do is you need to put the Fibonacci, right, starting from that high point and bringing it down to the lowest point. Okay, to the lowest point where market decided to create structure. Okay, so wherever market stopped, right, bounced up and down, and it still has not broken that level, that is where most likely it's creating structure. Okay, so again, you're gonna draw it out from the top right, from the highest point to the lowest point. Right now, if it's a uptrend, right, if price is going up and you want to see where you can catch a retracement, right, a pullback for you to enter a trade for the upside, it's the opposite, right? You're going to basically draw the Fibonacci from the lowest point to the highest point, right? To wherever market was creating structure, wherever market stopped, that's where you're going to draw it, okay? And I'll show you here in a minute. Now, find shift of momentum, okay? Now, the shift of momentum, what it basically means is if you're looking at the Fibonacci for an uptrend, but then let's say, you know, the uptrend is about to finish, right? Then the price of the market breaks, right, your levels of your Fibonacci, right? And I'll explain what levels, right? If it starts breaking those levels, if it starts closing underneath those levels, then that means that the momentum of the market has shifted, okay? That means that you're probably not in a buy, in an uptrend anymore, in a buy trend. You're probably changing to a downtrend, okay? So in that example, in that instance, you will have to change your Fibonacci. So you won't, at that point, once it breaks those levels of your Fibonacci, you can know, okay, the market is wanting to come down now. So now you can change your Fibonacci, right? Not from the bottom to the top, but from the top to the bottom. Why? Because now you see the shift of momentum, because it broke your levels of your Fibonacci and it looks like it's coming down. So now you can absolutely change your Fibonacci again to see that retracement for you to catch a good sell down. Start it from the top, right? And bring it down. All right, start from the high point, bring it down to the low point where you see structure in the market. All right, and that will give you a very good example of where you can enter a trade. Okay, and if you have zones drawn out on your chart, and when you draw the Fibonacci, if those zones match up with your fib, that's an extra confirmation level, right? That tells you that, number one, your zones are in the right place. Number two, that the Fibonacci is most likely going to respect. All right, so that's extra confirmation for you to have when you're trading. Okay, so if you have zones in your charts, you draw down the fib and they match up with your zones, and you like it, you see that it's respecting everything, then that's a great setup, right? You can easily catch, you know, a bounce off of one of your fib levels to the upside, or you can catch a break and then bring it, you know, catch it to the downside, either or, right? It all depends on how you see the market and where you put your Fibonacci, and if you're actually identifying the trend the correct way and you're using the Fibonacci the correct way. All right, so let's head over to the chart and I'll show you how I use it. So here we're gonna be using GU, right? Great British Pound versus the US dollar. And we're going to use this for an example, right? Right now the markets are closed. It is Saturday. So the markets are closed. So this currency pair is not moving right now. So it's actually still, and that's completely fine. And we're going to find a point, right, where I would want to take a sell, right? Because if we look at this, even if we look at it, this is a 30-minute. Even if we go to the hour, you can definitely tell that momentum shifted from the upside and it came down. Okay, it kind of started making this downtrend, right? Even on the 4-hour, right? Even on the 4-hour, you can see that, you know, momentum was going up. It kind of broke, came down, it went up again, and then now currently, right after, before market close, I'm sorry, it decided to break and it was kind of moving to the downside, right? So we can know that, you know, this currency pair, we should be looking for a sell, right? We should be looking for a sell. So let's come back here and let's say we caught market right here, right? Let's just focus on this area right here. So let's say, hey, I want to get in on a sell, but I want to get a good entry, right? So let's say, for an example, for this example, right, we saw market where it was currently right here, right in this area. Let's say this right here on the left hand side wasn't even here, right? Let's say it wasn't even here. But let's say we caught the market here. We saw it was coming up, right? It kept going up. We're like, okay, it's going up. But I know overall that the market is in a downtrend, right? Look at all this, right? So what do I want? I want to get a sell, right? I want to get a sell. So let me bring my Fibonacci extension, right? Let me bring my Fibonacci extension so it can tell me what it's going to do. Okay. So what we could do is, right? What we could do is here, we could easily bring the Fibonacci from this low, right? From this low to the high, right? Now I want you to keep a few things in mind, and let me redraw it. Okay. Sorry. Before I keep going, I want you to know how to actually draw the Fibonacci. Okay, so I already have my fib in my favorites. So to get the fib, you go to the third icon here on the left hand, and it's gonna say fib retracement. If you want to save it to your favorites up here, you just click the star, and it'll save it up here. Right. So I already have it. So the way that you draw it out, okay, you're gonna come again, right? Because we're in the uptrend. This is a quick uptrend, right? Quick little uptrend. But I want to see if it's going to break my levels so I can take a sell, and even better, right? Get a better entry point. All right. So in reality, I'm just gonna catch it all the way, right, from up here, from the highest point, okay, to where it rested. All right. So because we're in a downtrend, I'm gonna follow the trend, right? And I'm gonna show you guys how to draw it. So we're gonna catch the Fibonacci. Let's go to a high point, right? Which is this one right here. I like this one. So we're gonna start here. And when you draw it, right? Whether you draw it, when you're drawing it with a downtrend, right? It's gonna start with 0, and where your support of your structure is, it's gonna be a 1. So it's gonna go from 0 to 1. If it's an uptrend, it's gonna go from 1 to 0, and you'll see the numbers here in a minute. So we're gonna take it, and we're gonna take it to our structure. Okay, we're gonna take it to the structure. All right, right there. Now you see how there's a 1 up here, right? Where I started it, you see that 1, and now where my structure is, there's a 0. All right, so there's a 0 right here. All right. So just wanted you guys to see that, right? So from the 1 to the 0, right? That's how you know that you've drawn it correctly. Now you're starting again from the high point to the structure to the low point because it's in a downtrend. Okay, now let's see the settings of the Fibonacci before I keep on going, because I want you guys to get the same settings that I have. So let me go to the settings, and I'll show you the settings so you guys can go ahead and copy them. You can save them, and you can have a Fibonacci tool just like mine. All right, so now the colors on some of them, like my 382 level, my 618, I have those green for a reason. And then I have my 50 as blue. Okay, I have it as blue because again, those are some of my important levels that I'll go over here in a minute, and you guys will see why. So you can pause this video and you guys can copy those settings, and that way you can have the same settings I have. All right, so let's look at what the fib is giving us. Right, so now look, some of the levels, before I keep going, some of the levels that you want to keep in mind and that you want to know about and you want to keep an eye on are a few that I'll be reading here in a few. Okay, so some of them, right, some of the major percentages and the most important percentages are as follows, right? We got number 1, we got the 38.2% fib level, right? That's a very important level. That's one of my most important levels that I always use. Why? Because it tends to always come to that level, and it always retraces and respects it, right? So that's one of the most important ones that I have. The next one is the 50% level, which is another important one, very important one, one of the most important ones that I would say. because market always tends to come to it and it always respects it. Most of the times, if you're in a good trend, then you can catch you a very, very good trade off of that fib level. The next one is the 61.8% level. So I would say these first three are the major three that I would definitely write down, have them on your computer or have them on the side of your computer so you can always know, hey, I should be looking at these levels when I'm using the Fibonacci, because those three levels, guys, are the price always tends to come to. All right, then we have the 78.6 and the 88.6. Those are other levels you can also look at, but the major ones that you really, really need to be looking at and keep an eye on when trying to enter a trade or get a trade in, it's 38.2, the 50, and the 61.8%. Okay, and I'll show you those here on the fib. So my 61.8 is this green one right here. You can see the 618. My 50% is this blue one. You can see the 5, and then my 38.2 is this green one. Okay, so you can see that all of these are here and they're all with different colors. Now remember, we were wanting to get a sell, right? We were wanting to get a sell, and the market was right here, so it created this structure after this big downtrend, right? So we know that that structure is right here. Structure was playing, right? So what do we want? We want a pullback, right? So we can get a sell in, right? So what would I wanted it to do? What would I want the fib to do if we were right here and this wasn't a part of it? This wasn't here yet, right? We were trying to catch that, right? That's what we're trying to catch. So in all reality, my three levels that I told you guys about are right here, right? These three levels are the ones that I told you are the major percentage, right? So the 618, 50, and the 382, they're all right here. So what would I want price to do, right? If price was right here, we drew the fib out, I would want my price to come up to one of these three levels, okay? And since it broke already the 618, the 50, right, and even the 382, I would really expect price to just come up to my 382 and then bounce back down, right? And as you can see, it definitely did that, right? So you just have to be patient, guys. You have to be patient when wanting to get a good entry. So look, if you would have been patient, if you would have been, okay, I'm not taking a trade unless my price comes up to my 382 level and it respects it, right? And what did it do? Look, it respected it completely, right? It respected it completely. Let me adjust it a little bit so you guys can kind of see it a little bit better. All right, I like that right there. So as you can see, right, price broke all this. It formed this structure right here. It bounced back up. Could have easily taken that buy, right? That's another thing that you can keep in mind if you want to take advantage of the market and take everything you can. You could have took this buy, because I would have already known this is going to come back to my 382 or my 50, right? Or my 50, and it's going to reject and keep on going on the trend. Now, you could have easily just waited, or you could have taken a buy, like I said, or again, look, perfect entry. It came and gave you, right? Came and gave you a perfect entry. Look, on top of it being right at that 382 level, it was also at my EMA. Look, and it never broke that EMA. And look, right, well, look what it did right after that. Boom. All right, so hopefully it's kind of making sense to you on how you can start using these fib levels, right? So now, if price would have broken this, right? If price would have broken this, if it would have broken this 382 level, came back up, it broke this 50% level, and it kept going and broke this and closed up here, and it closed up here, that would tell me that the momentum is going to shift. That means that it's not going to be in a downtrend no more. It's most likely going to keep on going up, and I should change my Fibonacci retracement tool. Why? Because it broke all of my important levels. Okay, that's one of the things you can you can use and identify when using the Fibonacci tool is that if it breaks those levels, right, and it closes on top of the levels, you know that you should maybe be changing your fib so you can catch a retracement for a buy, right? Because it broke my important levels. That's something that lets me know that the trend is going to shift. Okay, it's not going to keep going down. But if it respects it, look, you can catch a very good trade, and you can use these fib levels to your advantage to take profit. Because look, if I would have took the trade up here, my take profit would have been down here, right at my fib level. Look, all right, and then when you're setting up a stop loss, okay, what I like to do is I like to put my stop loss a little bit above that fib level, right? Wherever you took the trade, whatever fib level you took and it respected, I like to put my stop loss like in the middle of that fib line and the other fib line above it. Okay, so in reality, I would put my stop loss in the middle of my 50 and my 382 here at 1.35388. All right, so that's a good stop loss, and my risk would be all the way down here to this fib level. And if you wanted to even go bigger, look, it came all the way down to my next fib level. Right, so that would have been another target that you could have easily had right there. Look, so that's another thing about the Fibonacci tool is that it gives you entries. It gives you take profits that you can use when taking your trade. So that would have been a very nice trade on GBP USD, right? You would have seen this downtrend. You put your Fibonacci retracement. You have you have a lot of very good confirmations that tell you that the market is going to keep going down. Number one, it respected that fib level. It broke all my other fib levels. Number two, it respected my 200 EMA, right? And it respected also it broke all my other EMAs, as you can see with this big bearish candle. So a lot of confirmations that really you could have seen. But in reality, if you wanted to get that perfect entry where you were probably not going to have any drawdown at all, this would have been the entry, and the Fibonacci would have helped. The Fibonacci, and again, it all comes down to your hesitation. If you're going to be hesitant on taking a trade, you're going to be scared, or you're going to be like doubting yourself, all that stuff. But in reality, if you put your fib, if you trusted your analysis, and you knew that the fib that the price was going to come up to that fib level, and you would have set, let's say you would have set a sell, a sell limit order up here, that would have been a very nice sell. You would have been happy. So I don't trade GBP USD, but that would have been a very good trade, and it would have definitely been in profit. Okay, guys. So again, the major percentages are here. Some of the extensions, right? Before I wrap this video up, because I don't want it to be too long. But some of the extensions are basically targets, right? So the targets that I use as far as take profit, when you're taking trades and you're wanting to catch a TP that you want to put for yourself, I would use these extensions to kind of see an area of target. So the 127.2 and the 161.8. Okay, and you can see right here, this is my 27.2 area, and this is my other area, which is the 61.8. Okay, so this one would have been one, and this is another extension. Now I do have those as well up here. Okay, so you can see that if we were on an uptrend, and let's say that I was seeing price going up and up, then I would use these extensions up here as take profit. But the ones down here are basically the same, right? So you could use those as targets, right? As you can see, for your take profit. So if you would have caught the trade up here, you could have easily, took a safe trade down to this level, down back to the floor, and that would have been a very nice, let's see what kind of move. That would have been a very nice 70 pip move, right, on GU. If you would have wanted to take it all the way down, that would have been about 100 plus pips. All right. So again, these Fibonacci levels, you can use them as targets, right? You can use them as targets as far as, okay, if you want to have a trade that you're going to put in, you can definitely use those as targets. Okay, guys. So yeah, that would have been a very nice trade using the Fibonacci and using these Fibonacci zones, these levels, as your take profit. Okay, so hopefully, guys, it made sense. It made sense to you on how to use the Fibonacci. I don't want to make this video too long. I don't want to keep you guys watching the video for 20-30 minutes, but I wanted to again give you guys this video so you guys can know how to use the Fibonacci tool. Go ahead and try it out, test it out, watch the video. Remember that if you're on the uptrend, you're going to be drawing the Fibonacci tool from the bottom, from the low price to the top price. If you're on the downtrend, remember you're going to be drawing the Fibonacci from the top price to the bottom price where market created structure. Okay, then from there you look at your levels, you look at your Fibonacci levels, you decide did it break all the levels, right? Did it break all my important fib levels? Did it not? Okay, and then from there you can take the decision on where you want to pull back, where you want to trade, and you can also even have your take profit and use these fib levels to identify your take profit. Okay, so again, guys, hopefully this video helped you. I will be leaving this document inside of the group. I'll post it in there. I'll let everybody know once I drop it. Hopefully this video helped you guys out. I will be sharing it on my YouTube channel, so make sure you go ahead and give me a like on this video. If you have not subscribed to my channel, make sure you subscribe to it. Drop me a comment below, any questions you might have, and I will see you guys on my next video. Peace.